Welcome to Pit Action, where in each episode we break down market structure, determine where the market's going next, and discuss potential trade ideas so that you can quickly and easily learn to trade with the whales and not against them, just like the pros. I'm your host, Marconi White. Today I'm joined by two of my favorite analysts from Jarvis Labs, JJ and Benjamin, who are going to help unpack the market. And it's going to be a lot to cover. My gosh, BTC's trading at 43K, Ethereum trading at over 2,200. So, I know we were talking offline. JJ, tell me, what's the mood of the market?
Seems to be one of profit taking to me right now. What I'm looking at here is the BTC chart. So we saw this nice consolidation pattern after this leg up here in October from 28 to 35 or so. Then we consolidated at higher levels here in the 36 region, and then ultimately we kind of blew off over the weekend into Monday and Tuesday up to the 45K level. And now you see kind of the market's just running out of momentum. There was a lot of people that were leveraged long on this whole ride up, and they're kind of using this end of the year pump as an opportunity to get out, possibly buy back. Maybe we could reach this 36K level here, which is the 50-day MA. This tends to act as a magnet in bull market, so I wouldn't be surprised to see price come down here eventually. Not necessarily confident enough to say that the top is in per se here. Like, wouldn't surprise me to see a stab up above 45K to say 47, 48K. But for right now, I think if you've been long, it's probably a good time to begin booking some profits. If you're sidelined, don't give in to FOMO just yet. Kind of let market settle itself out. There's been some longs chasing in recent days, which I think will get wiped out. So even if that's not bring us down to the 36K or so level, you will have a better opportunity for entry coming up here, I believe.
So telling some people, if you're sitting on the sidelines, now's a good time to take a breather and just wait for a little bit of consolidation.
Yeah. Don't give in to the FOMO here. Like, you look at this big move up, began on a Saturday, right? So Saturday is notoriously low liquidity. There was massive amounts of short interest. Let me pull up the liquidation chart. So all these green candles you see here on this chart represent shorts being liquidated. So as we could see over the weekend here on Saturday, price started to push up above 40K, and all of that short interest was getting evaporated. And as shorts kind of get liquidated, what has to happen there is the mechanism is they have to buy back their positions. So that turns into buying power, which becomes kind of reflexive, sends price higher. And you kind of get these artificially inflated prices where it's not necessarily true buying power that's drawing the price up. It's more shorts being forced to buy and cover at higher and higher prices. And it kind of creates a false elevation of price there, which I think will revert. Maybe we get that stab higher, but I think you're better off waiting for kind of a retest of this at the worst, rather than kind of gambling on another 3 to 5K move here.
So you're saying, from what you're seeing in these charts, you don't really feel like it's necessarily a market structure change as much as we've seen a lot of, excess longs or excess shorts in the system that just got pushed out.
There's definitely been a lot of spot buying, which kind of drove this, right? Like, in order to get price above those key levels, like say 40K, there needs to be that spot buying impetus, which we saw. But then obviously you have spot buying at 40K and you have those liquidations, and that drives the overextension to that 45K level, which we saw on Tuesday. And if we look here at options open interest, like we saw, there was a massive amount of call contracts here that were open at 40. So those positions fell into the money. And then we see there's another kind of call wall here at 45,000. And that's kind of our resistance. So I think what people were doing is buying these 40,000 strikes and then obviously selling the 45,000, taking profit on those. And now if it gets up above 40,000, the 50,000 strike comes into play here. Sorry for the dog barking in the background.
He's excited
for the worst timing.
Yeah,
he's excited when we're talking about options. So basically they have these 40,000 strikes open. They likely sold a lot of these to hedge. So you kind of have this position open. This is in profit now. And now you can sell this upside and protect it with, say, the 50,000 strike in case price keeps going. These are likely longer dated, say January through March or so. These are going to be shorter dated strikes, probably expiring at the end of the year. So we really would have to see 45K break if we were going to see an acceleration towards 50K. I don't necessarily see that buying pressure now. Like I said, I think a lot of people are taking this profit, deleveraging at the end of the year, kind of booking their net profits for the year and calling it a day. Maybe we could see some kind of catalyst come in, say positive ETF news or something similar. But I think we've squeezed a lot of the lemon here into the end of the year. It's kind of been better than anybody could have expected. So I don't think now's the time to be greedy. 2024 will be a big enough year. We'll have to maximize it all in the next 3 weeks.
Yeah, not looking to get greedy. Benjamin, what's your take on this most recent move up and what you're seeing from the market players?
Yeah, I think majorly it was spot driven until I think 42K. It started becoming highly derivative driven, and open interest was rising, and a lot of longs were FOMOing in because everybody was extremely sure, like, this is a big breakout, and we've been caught on our hands, sitting on sidelines a little, or we took profit too early. And that was quite reflective with bids coming in at 42K and holding the market, and price moved up very fast and cleared out all liquidation levels that was left over. And that's why if you see even the liquidation levels chart right above 42K, you see a cluster of huge amount of green bubbles, right? So that's all longs, or fat longs of high tier sizes that started FOMOing. And at the end of the move, you started seeing a lot of shorts coming in, right? So that liquidity is still left partially. There's still short side liquidity left around 44,300, I think. But since this was a highly derivative driven move above 42K, I think now a cool off is going on, like JJ said. There's quite a cool off happening across the board. We saw also a short drop in bid depths across the board, and I think it's profit taking, like he says. But I don't think it is as bad as Twitter talks about. I mean, it's certainly not the local talk. Probably we consolidated for a week or so, but there is a high chance that we see another rally as close as it gets to the Christmas period. Given typically in holiday seasons every year, we see a large move that happen. It's never a consolidation period in the last week of the year. So it's possible we see a large move towards the tail end of this month. And this is much more visible when I look at our screener, the advanced screener that we've been working on for our users. If you look at it, almost all top 10 tokens, Big, Ordi, Luncy, Meme, Luna 2. So it already tells you the high volatile tokens of the day, which are making a lot of price percentage changes compared to their open interest. They're all shitcoins. They're all meme coins. They're all mostly
They're all doo-doo coins.
tokens
Remember this?
Retail's
which
back,
are
baby.
Okay, so
so ordinals is the only one that you can bank on. Everything else over there, if you see, it's doing crazy volume compared to their open interest. So it's primarily market maker driven on those coins at the moment, and that's why it's highly volatile as well.
Yeah, so I want to rewind this a little bit because you shared some good information kind of quickly here. So this market screener is a way of looking at a series of tokens, looking at the open interest, and coming up with a perspective on if they're overextended. Is that a way to summarize what you're sharing here?
Yeah. So the idea is that if we look at, this is all about the Bybit futures market,
Okay.
for example, and how we look at it is, if we take the whole set of assets that's trading on Bybit perpetual futures, that's more than 200 tokens. So how are you going to identify which token to trade on or look at for the day? The first thing that we do is, like, anything that is below 5 million of open interest, remove it. Anything that is below 50 million of volume, on trading volume, remove it. And then you get a very comfortable list that you can look at. And then you calculate the ratio of volume to open interest, and then you get this, you sort it out and you get a whole list of things. So volume by open interest at 34, the top one, if you look at it, it's big. I don't even remember what that coin is, but what it tells us is that compared to the open interest, it's trading at 34 times in volume. So, which is not so natural, and that's why you see a large price movement also happened on the token. There's a 16% drop in the token. And if you look at the next one, it's ordinals, and it's no new news that ordinals has been doing extremely well. It has been a great beta to BTC in the past couple of weeks. I think we had multiple days where it did 80% pumps, and right now it is still at at 5% green for the day. And so what this helps us is to identify which of the tokens are highly volatile. And as a day trader, that's what you want to look at. You don't care about Link, you don't care about ETH, you don't care about BNB, which is not volatile. You care about tokens that's volatile if you are a day trader. So you wake up, you want to go in and quickly do scalping. These are the tokens you have to look at.
Got it. So I want to ask you guys, because we just talked about this price action, and I apologize if maybe you mentioned it had a couple of technical difficulties going on behind the scenes. Is this current rally, are we looking at it from both your perspective? Is this more of a retail driven? Is this more of a market maker, institution driven? And then how is that going to lead to where we expect retail to go next?
I don't think retail's really been present at all until kind of definitely above 40K, possibly above 35K, but they were very late entrants into this rally. I think kind of the primary theme of 2023 was institutional buying, and we see that in spot levels. I actually have a nice chart here. So this is whale wallets that we track. So it's basically wallets holding greater than 10,000 BTC.
Well, hold on. I'm not seeing anything on the screen just yet. And for all the listeners out there who are watching the live stream, this is our very first one. So so bear
Work in progress.
Yeah, we're making progress day by day, but I promise we'll get smoother and smoother. So, okay, so what exactly are we looking at here? The divergence chart.
So you, anytime we see these red dots, this is showing us that wallets that currently hold greater than 10,000 BTC have been in net accumulation. So what we saw here, basically since April, around first time Bitcoin hit 30,000, we started seeing these large wallets really start to add to their supply, right?
Mm-hmm.
All the way here through July, they took a little bit of a breather. Then when Bitcoin was in that September price range of sub 28,000 or so, they were buying again. And then we actually see this kind of parabolic accumulation pattern here that's been taking place over the past few weeks or so.
Yeah, so I just want to clarify, if I'm seeing some green on here, and it looks like it's kind of red or green, at least on my eyes, I may be colorblind. Is that them selling, or is it just them not accumulating?
That would be their wallets going down on net. So say they started the day with a million BTC cumulatively. At the end of the day, they had less than 1 million BTC cumulatively.
Okay, so they could be going down. Got it. All right.
And if you see a green dot, that means that smaller wallets have been buying. So that's kind of like your retail presence here. This would be whale selling, retail buying in the green spots, and then red is retail selling and whales buying.
Okay.
So we actually see they're happy to like continue to accumulate at these price levels, which will likely lead to higher prices in the future. That doesn't necessarily mean tomorrow, but very good for 2024 prospects that they still see this as like a value level here, right?
Mm-hmm.
Like if you're looking at it over, these people aren't kind of day trading it, I wouldn't assume, or at least not with their full stack. So they're kind of looking to buy it and hold it for some substantial amount of time, like as we saw here. Basically, look at 2020.
Yeah.
There's just never-ending whale accumulation all the way up. So it could possibly be that pattern starting, but I think that's been the regime of 2023 is just basically retail taking profit on these pumps and whales happy to buy it from them at whatever price they're going to sell it at.
Well, I guess that's where I'm really curious. It feels a bit like a regime change.
I would say definitely so. I think and it's strange how much this syncs up with the pattern of late 2022 as well, right? Like when we start breaking above 14K here, basically retail was pretty sure that the top was in. There was no way we were going back to all-time highs. And then we just accelerated. So I wouldn't rule something like that out. I don't think we're there yet. Like I don't think we're just going to shoot past 60K within the next couple months. Possible, but I think 2024 is shaping up to be a very nice year, like towards the tail end of 2024, second half, when we start seeing those ETFs come live and all of the flows that come along with it. I think people may be undershooting their price targets for 2024 based on that, but definitely a regime change, definitely institutional driven. I think if this was retail driven, we wouldn't have stayed above 30 to 35K for very long.
Benjamin.
Yeah, retail is very scared to trade.
Yeah, okay.
Retail is very scared to trade. I can guarantee that, especially at least in perpetuals, I'd say. There's definitely a lot of hodlers, but when it comes to perpetuals, I think there's still a lot of fear because when we look at open interest as well, let me share the tab. And then,
are you
so
showing
when we look at open interest as well, now TrueUSD will cover it next time. But
Okay.
when I look at the stablecoin margin contracts, which is native contracts, right? You can see how it's been flip-flopping. So it's basically they're opening a position and then they get scared, they close it, they start shorting and then they're not sure, they close it or get liquidated, and on and on and on.
This has
Until that
been
one whale in BitMEX at the bottom, right? He opened up a $150 million position. So that was the only degenerate who we saw. But apart from that, if you see the whole rally, it has been majorly muted when it comes to retail. There was certainly certain amount of euphoria yesterday because everybody was then very confident after 45K was hit that we are going to 48K or 49K. And we started seeing calls from crypto quant that Bitcoin will be above 50K in January and so on. So a reason for a cool off is definitely warranted, but it also seems like there's still certain amount of bidding coming up from spot market, even though it's not as same as what it was at 42K a few days back or during the weekly open. But this is not the sign of a reversal down to 30Ks.
no, far from the final pump for sure
Yeah,
here over the course.
yeah.
And what you see too, like what you were describing with those open interest levels, that's a sign of institutional adoption as well, is that they make it impossible for retail to trade with leverage. They just have access to way more data and they can chop these people up
Yeah.
anytime. And that's why you see such hesitance, is that
And we have to remember also that CME is now the top open interest when it comes to futures market. They have the majority share right now.
yeah,
Then comes Binance and then comes Bybit. So that
total
is something
regime
that we
change.
have to take into account in future. And yeah, it's a definite regime change.
Mhm.
And when those flows start to unwind, that's probably when we'll have to start to worry.
Yeah, when you see, like right now, let me pull it up. Let me know when you can see the chart that I'm pulling up here, the CME futures. They're currently trading at 43,800, so there's still a strong premium on CME. So that means they're willing to pay a higher price to get exposure. If you want to get exposure through TradFi, you still kind of have to go through this futures because they don't have the spot available yet, and people are willing to pay basically a $400 premium or so to get exposure on there. So when you start to see that kind of drop back to par with spot or below spot, that's probably as good a sign as any that the rally's over.
Now, JJ, you oftentimes look at the Dixie and use that as sort of a gauge. I don't think you've mentioned that today. How is that factoring into where you think we're looking next, or where you think this could go next?
So we saw it fall pretty low. Let me actually pull up our chart here. So this shows a bunch of different, pulling all these different metrics of DXY, and it kind of gives us a risk rating. So as we saw in November, it started to turn green, which is risk on for Bitcoin. So we started to get these risk on signals around 35K, and it stayed that way up until this week when it started to turn more neutral. So it was kind of hitting at risk off. But if we look at it, it kind of made this strong move off the bottom, right? It got to these really oversold levels on the RSI here. Looking at the daily chart, so this is kind of higher time frame. We see it as well on the weekly, got very oversold, and then went and back tested the 50 RSI point, which is kind of critical. You see if it gets above that, that's how we kind of get these big moves that lead it higher and higher. But it back tested that. So far, it's failed. I would assume that it's probably going to fall at least below the November lows now, assuming that this breaks down from here and it kind of rejects as it has been. We've kind of gotten some weakening economic data this morning, I believe, on jobs. So that's leading to a weaker Dixie. I think the way this kind of relationship works between Dixie and BTC is that the moves of Dixie are priced into BTC preemptively. So I think if DXY were to fall, say it goes back to these lows here from July, falls below 100 during this breakdown, basically if it falls below 102 again, we'll probably see that blow off top for Bitcoin happen rather rapidly. And then by the time Dixie's bottoming out, like if it reaches these lows again, you probably want to start to look to de-risk as these RSIs fall into the oversold levels here where they typically bounce pretty strongly from. But right now, I think it's kind of neutral.
Okay.
Not really an edge one way or the other like it could. If it gets back above this 50 RSI mark, it starts trending. It's already above its 200-day again. It starts making moves back up to the 105. That's going to be very strong risk off signal. But for now, it's kind of in this safe area. which kind of lends itself to what we were discussing, right? Like the market's just taking profit. It's not really, doesn't have much of a read one way or the other. Maybe we go to 50K. Maybe this is the short-term top for now. We kind of reconsolidate in the 36 to 40K region for a bit. But it's kind of just waiting to play itself out. That's the way I'm looking at it.
Well, thinking about that consolidation, I think maybe it was Ben Lilly, one of our other analysts who's not here today. He shared a chart. At least I think he communicated on X. There was someone who was putting up a chart around the number of days it's been since we've had a 30% pullback in Bitcoin. What do you guys think of something like that? Is that old data that we don't need to look at anymore? Are you, when you talk about this consolidation, looking for a pullback?
Yeah, this time's different.
Yeah, well, that's what I'm asking, because I mean, what we just talked about, right? We have some kind of regime change that's already underway. We have less retail. We have more institution. And now, if we looked at a 30% pullback, that'd be about 16K or over. That put us back slightly below 30K if it just went from today. What do you guys think about that? Is that still something that's on the table?
I think that we do get a 30% pullback at some point by Q1. I would say probably like in that January to March. Maybe we get this euphoric blow off top to over 52K, and then we'll see the deleveraging. Like, as long as there's this existence of perpetual contracts and whatnot, you'll always have people over leveraging, and they need to get washed out. The institutional algorithms know how to wash them out, how to find those max pain points and hit the liquidation pools. So I think it's a matter of time. They might want to engineer more liquidity, though. And the best way to do that is to push price above 50K, really create that FOMO, and then everybody believes this time's different, right? Like Bitcoin's never going to pull back again. And then you'll see it. For example, like 2021, let's look at that. We saw this huge move up, right? Like, look at this from October to January, basically 2-month span. We went from like 10K to 40K. It was this time different. It's never going to pull back again. Then we fell right into the 50-day moving average. So you see how that works as a magnet, especially during bull runs. Sooner or later, it comes down to test that. All of this was liquidations here, right? Like, these people get washed out. They're late. So maybe we see that now and we fall down to 36K, or maybe it keeps going. This 50-day rises up more and we come down and test it in Q1 when it's closer to 40K. But big breakouts like this 40K level are typically retested over time, right? Like, you just don't see it break above such a crucial resistance and keep going forever. Sooner or later, price will gravitate back towards the mean. And I think that's going to be inevitable. So long as people are trading with leverage, there will always be large wipeouts that follow with it.
Benjamin, are you of the same opinion?
Yeah, I agree with JJ, and I think it really depends on how this market consolidates in the next few weeks. And if open interest keeps decaying, then it is pretty clear that we don't have much of longs confidence coming in, and it is still shorts trying to get in because it is a golden fib area, like 48K. It is the golden fib retracement. We are still in a bear market. Crypto capo type of people come in and say it's good. It's a trap. So we are still seeing those narratives come in. Like, we are still seeing people say that, okay, it's good. We moved from 16K all the way to 45K. That's a 3x move. It's good time to start taking up a breather, take some profits. We'll come back to it. So this is the kind of discussions that's still going on when we look at social sentiment as well. So that's why you see these short-term profit taking still happening. I mean, we did not even drop a solid 5% from this year's high. By now, we should have dropped like 10% if there was a large amount of profit taking happening. And this is despite Pablo alert and all that we are seeing. Price is still holding up quite fantastically. Sure, there is a constriction in the bid order book depths, but nothing that is so alarming that we have to talk about retracement to 30K yet. We might be in for a surprise, to be honest, if this type of consolidation and a weekend pump and a Sunday open pump continues, especially with the macro news that's been coming out and potential Fed pivot with so much liquidity constantly coming into the market, and good news about ETF constantly coming in. And if you take the options market as well, I think JJ probably has a better view. I think there's still a lot of call sellers at least from the market making side, constantly coming in.
Yeah, I think
So
on this
there's
move we
good
saw a
enough,
lot of that. People
yeah,
kind
there's a
of
good enough
selling.
chance that we get another gamma squeeze.
Mhm.
So if we get a week or two consolidation, I'm pretty sure QCP Capital and a few others are going to open more sell calls, and that's going to fill up the book, and that gives another incentive to squeeze them all out. Whether it is a fake news of ETF approval or not, it does not matter. To just squeeze it out, and yeah.
So someone's getting that intern a nice Christmas basket and a bonus for this rally.
We got to get the SEC and turn on the payroll
That's right.
to
That's
tweet some
right.
stuff out.
Okay, well, so what I'm hearing is we've obviously seen a move higher. We're sitting above 40 after most of the year being in the 20 to 30 range. Retail hasn't really participated here yet, and clearly, I think anybody who's been outside of the markets during the bear market, they certainly have not returned. So there's nothing going back to like a full bull, if you will. And you guys are saying, hey, this is a period of consolidation. No reason to really FOMO into these levels. You're expecting a little bit more consolidation, but maybe a move a little bit higher, a little bit lower, and maybe over the next couple of months, starting to see something that would be a larger correction. So I guess then my next question is, if I got all that right, are you guys seeing a trade now? You guys just talked about profit taking, but are there trades that people could be looking at, or trades that you're specifically looking at? Benjamin, I'll start with you. What are you looking at as potential trades? Are you just waiting until just to see if this cools off a little bit more?
So on BTC, still waiting, but on ETH, starting to pay more attention because of how ETH BTC looks like. It's quite near the lows of 2021 and 22, so that's not something to be ignored yet. And ETH has been a laggard when it comes to BTC. So if BTC tops out and does a small pullback or says that, okay, this is a blow off top, this is where I stop, then ETH can have its final breather and it probably goes to 2,500 or 3,000 at that point. And then we see what happens to the alts as well. And specifically about the alt market, I think this theory could still end up being a failure, and ETH basically does not run, but alts continue to run. It is still possible because in this week's puke from 45K, or let's say even the breakout from 42K, until 42K, alts were still fine. We saw ordinals, we saw so many tokens, we saw Solana, Link, all of those do fantastically well, kept going up. But the moment BTC broke out of 42K, it was dominating the entire market cap, right? BTC DOM was at its peak. It still kept going up.
Mm. Okay, so looking maybe at ETH as a play, I hear a little bit of an echo there. So you're saying if you can see a little bit of a pullback, Ethereum stays strong, then you'd be looking at an ETH BTC trade.
Yeah, ETH BTC is still a trade that we have to look at. And when it comes to alts, I think there's a lot more froth in alts compared to BTC or ETH.
Mm. Okay.
Yeah, I agree with that too. Specifically to ETH, like ultimately, if we get this catalyst that the BTC ETF is going to be approved, and that makes the ETH ETF approval imminent as well, just based on the same ruling. Is that the reason why we're getting the spot ETF? Is that the SEC approved Bitcoin futures to trade, but they didn't approve the spot ETF? They've already approved ETH futures. There's a bunch of ETH spot applications. So if they allow Bitcoin spot to trade, they're going to have to allow ETH spot to trade at some point. So what I'm looking at there specifically to ETH is the ETHE, the Grayscale Trust. It's still trading at like about a 20% discount to NAV. So the actual amount of ETH they hold that backs these shares is you can buy it at basically a 20% discount here. If we look at the chart, you see it's been breaking out. Obviously, a lot of interest has been coming in to capitalize on this discount. There's going to be some forced selling from the FTX estate on it. They owned a massive amount of ETH, so they're going to have to sell that back to make creditors whole on that. But I think that might provide a good entry. If it's basically a good entry already, and you might even get a better entry on it if we see a pullback. But if you're kind of sitting on the sidelines wondering what to do, how to get some exposure, I think this is a great way to express that.
So
terms of
the
short-term
Ethereum,
trade.
yeah. So the Ethereum, the Grayscale Trust, rather than just buying spot ETH.
Yeah, because you're buying at a discount, right? You're kind of getting 20% more ETH than you would if you were just buying spot ETH. This is basically priced at around like 1900 or so per ETH if you do the calculation. So you're getting a pretty nice discount there, which caps your downside in the case that we do get that pullback.
No,
Short-term trades, I'm not really
I was
interested
going to
in
ask
too
you, is there
much.
anything else you're looking at from a trade point of view?
I would really wait to see if we get that move to 47 to 48K, or if we get a pullback to say 36 to 40K and kind of see what the market looks like then. I kind of think this is basically no man's land. Like I said, if you have been long, just stay long. Downside protection, if we take a look at one of our show sponsors here, Coin Calls Order Books, we do see, like, if you're expecting kind of a deep pullback, like one of those 30% crashes into the end of the year, there's some pretty cheap put options here. Just because the upside's been so juiced, is that people are kind of discounting the possibility of downside from here. So you see you could buy a 38,000 put option for about $335 or so currently, and say Bitcoin crashed to 30,000, that by the end of the year this would turn into about $8,000 of profit for you. So there's some good opportunities there. You can figure out how to structure it, possibly selling like in the money or out of the money calls if you're super bearish and fund it that way. But nothing that's really like jumping off the screen at me right now. Just some possible ideas if we see a confirmation that the market's going to go higher or lower. Some things to start thinking about in terms of spread trading there.
Which I think is actually a good point to mention, or just maybe it's a good narrative, is that there's nothing wrong with sitting on your hands and waiting for the market to come to you, right? That's what the pros are going to do. They don't feel the need to constantly be looking in the market. They feel the need to be finding the right setup. Is that a good way to look at it?
Yeah, like look at this move, right? Like the reason why we have people profit taking is because they were positioned beforehand. They weren't FOMOing, they were waiting. They saw the right setup and then they capitalize on it. And now they get to take in their profits and chill for a bit. And that's kind of the model you should be following, rather than like, oh, the market's moving, I have to do something today.
Yeah.
It's more wait for your kind of system to line up, give you a clear signal, and then execute it, rather than rushing into a position and ending up as somebody else's exit liquidity. Like if you look at these liquidations, right? Like you don't want to be the person buying when somebody is being forced, you know what I mean? Like this is running the price up when all these shorts are being forced to buy. They're being squeezed out. You don't want to be buying when people are getting squeezed out. You would rather be buying someplace like here where people are getting washed out to the downside, and it's creating the opposite effect where price is going lower than it should because people are being forced to sell. You can basically become their counterparty and buy their liquidations rather than buying into the liquidations of shorts.
Okay, so what I'm hearing is good time to be monitoring ETH and also sitting a little bit on the sidelines waiting. Don't feel any need to FOMO in or rush into any trades right now. And that could all change before our next episode, or by our next episode, which is scheduled for Tuesday right now. So guys, I think we're about out of time here, as we're looking for about 30 minutes. Final words on the market that you want to share with the audience today. Benjamin, I'll start with you.
Look for pullbacks and further alerts in Oculus. Until then, just be at peace.
Man, you're making
find your zen.
Get some of my green tea.
Yeah, that's it. Just be patient. Don't like anytime you see these movements, Ben kind of wrote a nice piece about this. I believe it was yesterday. Just talk about how liquidity is engineered, right? Like you need these wild price moves to entice more people to buy, but ultimately there's going to be a counterparty on that sooner or later, which is these whale wallets we were discussing that have been buying up. So don't rush into moves. Sooner or later they will be distributing. So kind of wait for moments where you think that they might be buying rather than selling to you, and wait for those moments rather than rushing in.
All right. Well, I like that. Well, hopefully for all those out there listening to a live show, or even if they watch it afterwards, you're able to get a good sense and get some confidence in that you can wait a while. You don't need to rush in here, especially if you're seeing some of that sentiment on Twitter, which is going to start talking about, I would say, elevated price levels of where Bitcoin and Ethereum can go. This is the time to buy. You don't need to rush in. As you just heard from JJ and Benjamin sharing their perspective, there's time, and we're certainly expecting a pullback at some point. So with that, we're going to wrap up our very first live pit action show. If you enjoyed this show, and I know you did, I suggest you like and subscribe to the channel, because we're going to be doing this a lot more, so you can get deep perspectives on how you can play just like the pros do. And I think, as JJ said offline, be able to work in the wake of the whale rather than try and fight the market. So JJ, Benjamin, thanks guys for joining us today. I look forward to having you both back. And for all those out there, keep a little bit of dry powder, stay safe,